Hello there. This is Mitch Firestone with Precision Trading Labs in New York City. I am here to bring you some trading levels for the equity indexes for the week of November 27th, 2023. This is the week immediately following the Thanksgiving holiday, and I hope everybody had a great holiday. So at any rate, let me start off here by the usual disclaimer here. Precision Trading Labs, we are neither money managers nor financial advisors, and everything we present is for educational and informational purposes only. So let's take a look at the charts here, and I will start off with the SPY, which of course is the ETF for the S&P 500. So here's where we are currently. And in fact, we are actually at a level of supply, and which I will, of course, explain in a moment here. But here's where we are today. And in fact, we have been at this level right here, which had formed in the beginning of August, and we have now reached here. And we're basically been hovering here for about the last 3 or 4 days. This is actually the 52-week high. Okay, and in fact, this was the origin of the large move that occurred recently, about a month or so ago, dropping from here all the way down to here. And this was about an 11% drop from that local high to this local low. And of course, this got a lot of press because that took us into an official correction. You can see we've now recovered pretty much all of it now. And so we're kind of back to pretty much the 52-week high. Right here, this area where this area of consolidation, and then that led to this drop here. This is what's referred to as an area of supply. This is an area where willing buyers and willing sellers were more or less in agreement within a relatively narrow range, and then following this gap, and then this move down over the period of about 2 or 3 weeks. This large move here represented an exhaustion of buyers that came out of this region. Buyers and sellers were in agreement. They then went out of agreement, and all you had left here were willing sellers, but there were no more willing buyers. And essentially, what happened for these trades to have occurred is that the willing sellers had to run down the price chart until they encountered willing buyers. Okay, so that's kind of the narrative there. And so when price returns here, we expected it to be stopped by this level, and then to actually perhaps get it turned around and sent back down. So this level has done half of its job. The price has come up here. It is now, more or less kind of stuck at the lower part of this range, but of course it has not come back down. And will it come back down? Who knows? So far, and in fact, the longer this thing seems to take here, it's quite possible that this might actually end up driving through. But we will obviously see what transpires as this week goes on here. Okay, so this is an area of supply. Right here, this is an area of demand. And this is exactly the same story that I just told you, except, of course, turned on its head. Right here, price rallies up, consolidates, and then notice, of course, this big gap here, and then this march up here. Okay, and so the expectation is when price, if we actually price got turned around here, this would be an area where we would expect to see a bounce. Okay, and so this represents an area of demand, and this is the same story that I just told you about supply, except of course in reverse. Okay, so this is an area where we had an abrupt exhaustion of sellers in this range, and then again the buyers ran up the price chart until they encountered willing sellers. Okay, when price comes back here, okay, this is an area where supply and demand were in agreement, and then once the sellers leave, all you have left is demand here, and so consequently, we talk about this as a demand zone. And when price returns to a demand zone, a high percentage of the time, we can then expect to see another round of buying. Okay, and so that's the narrative that goes along with this. And so when price comes back here, we would basically look to express some sort of bullish trade out of this level. And I'll go into that when we take a look at another one of the equity indexes here. about expressing a trade. Okay, so anyway, this is a demand zone here. Okay, and of course, right here again, that's that story that I just told you over here. This is the narrative again about the supply zone, and this represents this comes about as a result of an exhaustion of sellers here. Excuse me, an exhaustion of buyers. All right, so that's the story there. Okay, so the other thing is, if we look to see where we are now in terms of distance, in terms of the supply zone, we are of course right at the front door of it. So we're essentially we're right there. Okay, in terms of this demand zone here, we're approximately about 3% down. Okay, we're right sitting here at around 455, and so a 15-point move to get down to around 440 would be about a 3% move down. So that's what this represents here. Also, you'll notice right here, I did mark up another level here. There is a rally, a base, and a rally here. And in fact, if we broke this into a slightly smaller time frame here, probably a 2-hour chart, it would kind of really show up clearly. This is another area where we could potentially get a bounce here. I would look at this more as a probably an intraday trade or something where I'm not expecting a whole lot of follow through. We're kind of sitting in the kind of dead center in the middle of this swing here. And more often than not, we find that supply demand zones tend to work better from the basically the bottom third of a swing, and generally supply zones tend to work better at the top third of a swing. So right here you can see in terms of the swing, okay, we're right near the top here. You can see this one here is in kind of the lower third or so of this major swing going from here to there, and so that's what I'm referring to. This we're kind of sitting in the middle or even kind of closer to the top. They definitely do work, but they work less often than zones that are closer to the extremes of a particular price swing. All right. So anyway, that's the deal with the SPY. If we move on to the Qs, which of course is the ETF of the Nasdaq Composite, here's where we are. Currently, okay, so here's that similar higher range that I just showed you on the SPY, and this is again more of a level for a scalp or an intraday trade for the reason that I just talked about in terms of its position on the swing. Okay, in terms of the other zones here, if we swing over here and we go back in time a bit, you'll see that right here there's a rally, a base, and a drop here. And this goes back to pretty much about coming up on actually, let's see, this is the beginning of 2022 here. So this is actually about a little less than 2 years ago now. But that's where we're setting, we're coming up to this kind of 2-year high now, right here. Now those crosses, this represents the 52-week high. Okay, but that zone that I just showed you to the left here at about the 400 level, that was achieved about a little less than 24 months ago. Okay, and so we're about 2.5% away from there. Okay, so I would not be looking to short anywhere until we get to there, because I would expect that we're probably going to see this thing drift up here. Meanwhile, we could get a pullback here. This would be an area where we could expect to perhaps get a slight bounce, looking for a scalp or some sort of intraday trade. And then right down here, this would be an area where we could probably expect to see some reasonable follow through on a bounce. Okay, here this is another level right here where we could actually get a bounce out of here. But again, this is a little higher on the swing, and so this one I have a little less confidence in. I think this is the real quality level. Of course, in terms of that, obviously one has to be patient and actually wait for it to get there. Okay, so that's the level on the Qs. In terms of the level that I just showed you here, though, let me just turn the label on here on. I can show you what the numbers are there. So that's 377 and change, and the bottom is about 375 and change. So this is about a $2 range here. Okay, and in fact, all these levels here are kind of in that $2 to $3 range in terms of their depth. All right, so that's those are the Qs here. And lastly, on the equity indexes, I'll take a look at the Russell 2000. The Russell 2000 is in a major rally mode after being by far the weak sister of the three major indexes. But over the last, since we hit that correction phase down here, this thing has actually moved up about, what is that, about 18, that's about 18 or 19%, going from about 161 to about 184. That's approximately an 18 or 19% move going from here to here. So that's showing actually great relative strength as compared to the S&P and the Qs, which are, obviously up about 10, 11, 12%. This is about 18%. Okay, so that's actually on a relative basis. The Russell 2000 is roughly about 50% stronger than the other indexes. So here's where we are, though, in terms of quality trading levels. An area of supply right here is above here at about 3% higher than where we are now. And this level right here, this drop-based rally here, this area of demand, this is approximately about 5% below. Right here, this is just kind of slop in here. One could certainly drop this thing down into a 30-minute or a 15-minute or a 5-minute level, and you could certainly find some intraday scalping levels that you could play with here. But in terms of, let's say, putting together quality, particularly if you're using options or selling credit, these are really the levels that are going to actually accomplish those sorts of goals. All right. So this area of supply is about 3% above where we are now, and again, this area of demand right here is about 5% below. So what we can do out of either of these levels is what we can express up here, either a bearish trade, or down here express a bullish trade. So what do I mean by that? So right here, I just have these these simple ways of expressing a trade listed here. So right down here at this demand zone here, the obvious thing, of course, the most straightforward thing is, of course, simply buy the IWM. But another thing one could do, of course, would be to buy a call at this level. And you could buy a call at the money, which would be at around the 170 mark, or you could buy one that's in the money, let's say at around, if you bought, let's say, the 165 strike. Or you could, of course, then also, get a little more sophisticated by buying a bull call vertical spread, which would mean that you would buy a call at a lower strike and then sell a call at a higher strike. And then that would offset some of the premium. And then, of course, it would also make it a less responsive, in a sense, a gentler, a cushioned trade, because of the fact that you're buying delta, but you're also then offsetting delta by the option that you sell. So it makes it a less responsive trade. And of course, it would also make it less sensitive to time decay, because of the fact that you're selling that offsetting option. Okay. So, and then the last thing one could do here, obviously one could do an infinite number of things, but the last, in terms of the simple strategies, you could also sell a bull put vertical spread. And essentially what you would do is then sell premium. You could sell and actually collect premium here. Okay. And so what you would then do in terms of accomplishing that is you would sell a put at a higher strike and then buy a put at a lower strike in order to limit and define your risk. So those are all the ways that one could express a trade out of a demand zone. And then up here again, out of the supply zone, it would be the same exact thing, but again, obviously just turned on its head. So you could short the stock, you could buy a put, and then you could also put on the vertical debit spread using puts, and then of course selling a bear call spread in order to collect premium, and of course you would use calls for that. Okay, so those are all the ways one could express a trade out of either a supply zone here or a demand zone over here. Okay, and the last thing I will show you here is the bonds, the TLT. Okay, so the bonds have been, obviously because of monetary policy and the Fed, of course, trying to combat inflation and, obviously jacking up interest rates. over the last many months, over let's say the year plus, the bonds have been miserable. Since the end of October, they have been in rally mode, and we've moved from about 82 up to let's say around 90. So that's an 8-point move off of 82. So that's a little less than about a 10% rally off of that low. Okay. So where are we now? We are about 2% above, and let's get rid of this extra line, extra numbers here. So we are right here. We are about 2.5% below this supply zone here. Okay, and then right here, this is a 2-hour. If I change this from a daily to a 2-hour chart, we would be looking at a drop base and a rally here, and so this would be an area where we could anticipate getting a bounce here. So this is about 2% below where we are now. So again, we have supply on the daily chart about 2.5% up, and then this pivot here, which would represent 2-hour demand, that's about 2% there. Okay, over here we have an area of really this is just support. There is no demand in here because we've been back here multiple times. So we can think of this as support, but I would not be looking for. I would not consider this fresh demand that's worth actually putting a trade on. And then after that, then the next quality level down is pretty much back to the lows of where we are and where we were at the end of October. And so, of course, that's a fair distance down, relatively speaking. And so that's down about 6.5% from where we are now. Okay, but again, in terms of the near-term level, this is about 2% from where we are there. All right, so that's the story with the bonds. So I want to thank you for your time today. I really hope you found this interesting. If you did, I would be grateful if you would subscribe to our YouTube channel. And also you'll see on the YouTube page, there is also a link where you can, if you click it and set up a call, I would be delighted to do a brief call with you and to explain a little bit more about the supply and demand concept, as well as to give you a little further information about who we are at Precision Trading Labs. So again, thank you very much for the privilege of your time. This is Mitch Firestone, and I will see you next time. Take care. Bye-bye.